Hello and welcome to another podcast from Cummings Pepperdine. My name is Ian Gobin. I'm a co-owner and partner working alongside Claire Cummings. Today we are chatting with Eddie Noyons of Marfire, all about DAOs. Eddie, hello.
Hi, Ian. How's it going?
Good. So tell us briefly about Marfire.
Yeah, sure. So Marfire was founded actually 2 years to the day. It's our second year anniversary today, believe it or not. So the timing of this is pretty good.
Congratulations.
Thank you. Yeah, our founder started about 2 years ago with a vision to really bring institutional grade professionals into the Web3 space and offer a boutique, high touch fiduciary service to DAOs and their underlying foundations and funds that have an underlying Web3 or digital asset strategy.
That's great. So today we're talking about DAOs, decentralized autonomous organizations. Eddie, what are they and why do we care about them?
So Cointelegraph wrote a really good article about this a few years ago. I'd point anyone to go have a read of that if they want to, get a bit more in-depth, insight into this. But very simply put, and I'm thinking of this from the perspective of what a perfect DAO would look like, is that the idea came from Vitalik in 2014 in a paper he wrote. But a perfect DAO is a vehicle that doesn't have any central leadership. The decisions are made by the underlying token holders via voting, and then the outcomes of those votes are, run via an automated smart contract on a blockchain. So this setup really has some very key advantages, which has led to DAOs becoming as prominent as they are. And I think I'll just start off by running through some of those advantages, and then we can maybe chat a little bit about some of the challenges as well. So a very key thing about DAOs and why they've become popular is the concept of trust. So in a traditional business, you have shareholders who are providing value, and then you typically have a very small group of informed individuals who are making the decisions and putting those shareholders' value at risk. We've seen many examples across history where that's been unsuccessful. There's obviously very good success stories as well, but the crypto community especially wanted to create something where that trust mechanism was different. So a DAO really resolves this in that principal or agent dilemma is taken away, in that the power and decision making rests with all the members of the DAO, and members are typically the top people that hold the underlying token that the DAO has minted. So it fosters collaboration between all the token holders. They can make decisions together, and that lack of hierarchy means that a very innovative idea can be put forward by any token holder. The whole group can consider it, improve on it, and then vote on it and implement it. And then the DAO can implement that through whatever strategy it's doing. And then I think the last thing that's really critical is this concept of the implementation being on a blockchain via smart contract. So smart contracts and blockchains are typically open source. They're verifiable. Anyone can go look at their address and read the code if you're so inclined, and they can be audited. So everybody knows up front what the execution of that vote will look like, and that adds a major level of transparency. So it's these key things or concepts of having power shared by all the interested parties, and then having their decisions executed in an automated, decentralized manner, kind of leading to the word DAO.
Do you see them as like the next sort of evolutionary step in the commerce of humankind?
I'd sure like to think so. DAOs are still in their first innings. They're quite young, I'd say. They've only become mainstream in the last few years. So I'm sure we're going to have different iterations of them as we move forward. And maybe that's a good time to just bring up a few of the challenges that we typically see and how they might evolve over time. And then hopefully, they'll become more prominent in our marketplace and help with a lot of the challenges. So some of
they started off badly, or rather, there was an immediate evolutionary step when the first one was created. So perhaps you'll touch on that with the challenges around them in the early days.
Yeah, I think people often confuse like DAO with the DAO, which eventually, led to Ethereum effectively forking back in the day. So yes, I think if you think of it from that perspective, they had that rocky start you maybe mentioned, but the DAO was quite separate and was one entity, if you will, versus what we're seeing now, which is a collective of DAOs that are operating in various ecosystems and in different ways as well, which I'll get to in a bit. But some of the challenges that certain DAOs face is having a legal personality. So if a DAO is not structured right, most jurisdictions don't recognize them as having legal personality. So if you're a DAO that needs that, and your intention is to be able to enter into contracts, enter into agreements with service providers, hold real world assets, you have to structure in a way that there is an underlying legal wrapper to allow you to enter into those contracts. Yeah.
If you don't go into the wrapper, most jurisdictions will deem your DAO to be a general partnership.
Exactly.
And as such, you're going to have unlimited liability as a member, as a general partner of that partnership. That's what you're alluding to now. So it's a question of how do we structure to avoid that situation.
Yeah. So, and you've hit the nail on the head there. There's a few cases open at the moment where all the token holders are being pulled into lawsuits, and structuring a DAO, if you need that kind of legal personality, becomes critical. And we'll chat in a bit about how that structuring can look. But that's one of the challenges that DAOs face, is knowing what their purpose is. Some DAOs don't need that legal structuring. They're just a group of, a small group of people that want to do something. They can fund a smart contract with Ethereum and they can execute. They don't need to enter into contracts, etc. That works for certain types of DAOs, but you get other DAOs that are much larger. They need legal representation. They need service providers. Those DAOs need to structure right to facilitate that. And we'll talk about the structuring in a minute. Other challenges DAOs have, and this is an area that's really being worked on right now, is concentration risk. So, a key advantage of a DAO, as we said earlier, was removing that trust and having the power be dispersed to make decisions amongst token holders. There's obviously a challenge where token holders could accumulate such large positions of the total token supply that they could, in effect, have one or two people holding the majority of the supply, and that way can make decisions anyway, which kind of takes away the purpose. So this is a very topical area. There's people talking about it all the time in the space, and something that we need to be aware of and think, how do we make that better if we want the space to keep succeeding? And there's lots of good things coming out of that, based on, an example is delegating your votes. So maybe small groups of smaller token holders who have a very similar way of thinking can connect and then delegate their votes together to give themselves a larger pool to make decisions. That's something that's being done way more commonly now in DAOs, and I think will be a good step in fixing that. And then the last thing I'll touch on, and we're seeing this especially in the DeFi space fairly often, is because a DAO, in a perfect world, it's running on an underlying smart contract. Those smart contracts are obviously susceptible to hacks. And this is why it's super important to have good fiduciaries in place and ensure that your smart contract's being audited more than once, and that it's going through constant audits through its life cycle as changes are made. So those are a few of the things that are, larger challenges, and the people that work in this space are really working on making those things better.
Let's throw some kind of business cases out there for DAOs. What can they be used for, and what are they being used for?
Yeah, that's a great question. I think this area is kind of open and limitless. I'd probably focus on the kinds of DAOs we typically see, and then maybe throw in some real world examples. So I think the big categories of DAOs really start with protocol DAOs. So these are DAOs that govern a decentralized protocol, such as a DeFi application where you can exchange assets or stake assets. There's typically a DAO overseeing the decision-making of that protocol, and monitoring what it's doing and where it's going. Similar to an NFT project, for example, the Bored Ape Yacht Club, there's a DAO governing the decisions and business runway of what the Ape Foundation's doing with the underlying NFTs. Another very common type of DAO is a grants DAO. And this is a DAO where you have a protocol such as Ethereum. They can create a foundation, have a DAO, and they can provide grants to developers in that ecosystem to fund them in developing and growing that specific underlying ecosystem via that system's token. So it's really effectively just a funding mechanism to ensure growth and development on that specific chain. Very common, and a lot of the DAOs, from a volume perspective that we see, are grant DAOs by nature. And then you get this group of DAOs, you can call them social, collector, venture DAOs, where people are effectively just pooling resources together, typically like-minded people, and then using those resources to make investments or for social purposes, and then voting based on the tokens how to disperse those resources to charities or whatever investments they want to make. So a few well-known examples here is the Constitution DAO. So I think it was in 2021, they raised close to $50 million worth of Ethereum, and they, at a Sotheby's auction, were bidding to buy an original copy of the US Constitution. They sprung that up super quickly. They were able to pool resources, have an underlying smart contract, and then could enter into a real world transaction to buy, something that's tangible. Another cool one that actually happened very recently is a DAO called Links DAO, where, again, group of like-minded people that are all golfers, they pooled money together, and they just successfully purchased, or I think they're going through the mechanism of purchasing a golf course in Scotland. I assume all the members are going to be able to play there and automatically be members of the golf course, etc. So just two really cool uses of what a DAO can do in the real world.
You mentioned investment. Well, I'll jump in on that straight away. Do you sort of see these as one day replacing traditional corporate -LP structures in the world of hedge funds and private equity, or do you think they'll stay in a very sort of niche market?
I think if anything, they likely complement the asset management space that already exists. I think the asset management space has proven its resiliency and it's pretty strong. But what's really cool on the DAO side is it's typically, smaller groups of very like-minded individuals that have a very common philosophy, and that's hard to sometimes implement in a very large asset manager that's kind of open to the general public. So investments become very broad, and it's hard to manage a very small fund without having that scale in a profitable manner, where DAO is able to do that. So I think it gives a lot of flexibility There's obviously very careful legal structuring when you're doing an investment type DAO. You don't want to land in a situation where you are effectively actually a fund and you should have registered that way in whatever jurisdiction you're in. So, I think there's some careful legal considerations when you're doing an investment DAO.
So how and why structure through Cayman when it comes to DAOs? I know what you're going to say, but walk us through the options and roughly why one particular entity is really the vehicle of choice behind a DAO.
Yeah, sure. And just, I think, to bring it back, we've spoken about some of the attractive reasons why DAOs exist. It's super critical, though, that for a DAO that intends to enter into real world transactions, contract with service providers, etc., that they are structured in a way that allows them to do that, and that they're structured in a jurisdiction that's got clear regulations and is open to Web3 innovation. So I'd focus more on what I'm familiar with day to day, which is foundation companies, specifically in the Cayman Islands where we are based. So foundation companies began in Switzerland. They were seen as an alternative to a trust, but they had legal personality. The crypto industry or Web3 industry really became attracted to them on the basis that they don't have or don't need to have shareholders, in that you could have a group of founders who wanted to create this DAO, set it up, do the initial funding and cost of getting it set up, and then they could step away from it. They didn't have to be shareholders. Once the tokens were minted and dispersed, those founders that started it can step away and hand over the reins to those underlying token holders, giving the DAO the D and A of its namesake, being decentralized and automated. So the foundation company structure allowed that. The Cayman Islands has its own Foundations Company Act, which I think has really facilitated a lot of DAOs and their underlying foundations being domiciled in Cayman. But beyond that, I think Cayman has also become the favored jurisdiction, beyond, say, Switzerland and Dubai, on the basis that Cayman's got a very established financial base in terms of asset management. There are very clear regulations related to foundation companies, but also digital assets through the VASP Act. You have a lot of service providers that are native to the industry, such as ourselves, that are already based here. So it creates a really good environment that fosters that kind of innovation.
It's curious, isn't it? Because foundations, the act itself, it wasn't dreamt up with Web3 in mind.
Yeah,
and yet it's the perfect vehicle to use when you are in the Web3 space. It's one of the few times that you kind of see that. Whereas normally the whole Web3 and crypto doesn't fit in with legal structure, regulatory environments, and yet foundations are absolutely perfect for DAOs.
Yeah, exactly right. I mean, they've, as I said, just piggybacked essentially off a structure that was initially to be used as an alternative to trust. So that happened to just work out really well, and that everything that goes with the foundation company is very suited to the Web3 space. So I mean, building on that, you've got the situation where you don't need shareholders, so the founders don't need to be running it day to day, and can separate themselves from a tax and regulatory perspective. But then beyond that, the constitutional documents of a foundation, and especially the bylaws, are a side document that determine what the foundation is doing, what it should be doing, how voting will occur, and the mechanism of governance. So having a separate bylaw document gave Web3 companies a lot of flexibility in that they could determine how they wanted the foundation to operate, and that, you know, you can also amend those bylaws as the DAO and its underlying foundation kind of goes down this decentralization roadmap over its life cycle. So the whole structure just really lent itself really well for Web3 companies to use.
You've got your Cayman Foundation in place. What else do you need to consider from a Cayman regulatory perspective?
Yeah, sure. So there's certain roles that need to be fulfilled in order for a foundation company to exist. That, you know, they include a secretary, a registered office, a supervisor, and directors. These are roles that are quite easily filled in the Cayman Islands. There are various service providers providing each of those, and you have options across each of those as well, which I think, again, is a reason why Cayman has been popular as a jurisdiction for these, because you have so much depth of experience in people that can fulfill those roles. And there's multiple law firms based in Cayman that have been structuring these for a long time, and are just very familiar with the ins and outs of that.
And I'll throw another acronym at you, VASP.
Yeah, the Virtual Assets Service Providers law.
What have we got to do with that in terms of a DAO?
Yeah, so, you know, we're talking mostly here about Web3 or digital asset DAOs. So by nature, they are operating in the virtual assets space. So depending on what they do, those DAOs need to ensure that they've done an analysis of whether their activity could be construed as a virtual asset activity and therefore be pulled into the VASP Act of the Cayman Islands, or the BVI if they have a subsidiary that within the structure that's based in the BVI. You know, again, there's a lot of service providers in Cayman that typically help founders or DAOs with regulatory memos to determine if their underlying protocol, how the revenue flows, where the IP sits, etc., would have, you know, pull them into being a VASP. And if so, again, those same service providers will help them navigate that registration and the licensing regime.
Yeah, ultimately, how can you and Marfire help clients when it comes to then looking at putting a DAO together?
Yeah, so it's super critical to remember you've got the DAO, and then next to it sits the foundation. That's the underlying legal wrapper, if you will, that allows the DAO to operate in the real world. But at the end of the day, a perfect DAO down the road needs to become more decentralized and more automated. Otherwise, we're just in the, you know, traditional company sphere. So we have two companies, one called Marfire, one called Autonomous, and they both fulfill a function of helping these entities become a true DAO. So Marfire, as I alluded to earlier, is a boutique professional directorship firm. We provide a director to sit on the board of the foundation company, which is one of the required roles. And really our role there is to ensure that the right guardrails are in place for the foundation, to monitor its compliance with Cayman law, and to ensure that the governance of the foundation and the DAO that sits next to it is being done in accordance with its constitutional documents. So we have a team of individuals that are very Web3 or crypto native. You know, we come from backgrounds of being lawyers at large firms in Cayman, from being at Big Four auditing firms in Cayman, or being investment professionals at family offices in Cayman. We've put together what we really believe is the largest and fastest growing team in Cayman that's Web3 native and has a real passion for serving the Web3 industry, whether that's foundation companies and their DAOs or funds that have a Web3 trading strategy. And then autonomous. So Marfire is really about putting the governance and the guardrails in place, whereas our affiliated entity, Autonomous, is all about helping a DAO decentralize and becoming truly decentralized, so that it's not those initial founders that are doing the day-to-day management or operations of the DAO. So Autonomous provides a outsourced service for DAOs. We help DAOs with their internal finances, so typical record keeping and payments. We help them with their operations, which could be setting up bank accounts or exchange accounts, monitoring and engaging service providers. And then a little bit more down the Web3 rabbit hole, we help foundations and their DAOs with their grants and governance programs, where we effectively act as a manager to facilitate grants and their governance process. There's a bunch of other ad hoc stuff that we do on a ad hoc basis. A very common thing that foundations struggle with is opening bank accounts. Because they're set up in such a way that they don't have shareholders, there's no UBO, and that's a very tricky concept for a traditional bank to deal with, because who do they KYC? So foundation companies have historically really struggled to get banked. And Autonomous, one of the first things we do and something we've become very good at is helping them get banking relationships.
Yeah, I mean, banking relationships is obviously highly topical at the moment, given the sort of situation that's been blowing up both in the States and also in Europe. Thankfully, the banking options are still there, but I would imagine it is going to become increasingly more difficult to find banking partners.
Yeah, and beyond just finding banking partners, I think it's also going to become more important to find the right banking partners that are committed to the Web3 space, come good or bad times, and ensuring that the right due diligence is done on those partners, especially with all the liquidity issues we're seeing.
As I said, I know we've had banking colleagues and friends in the industry that we always go to for our clients, who always try to help out. So a quick shout out to them.
Yeah, awesome.
Eddie, thank you very much for your time today, sharing your expertise with us. I really appreciate it, and I'm sure it'll be appreciated by our listeners. Thank you.
Ian, thanks so much. It was a real pleasure joining you today, and I hope we can do this again in the future.
I'm sure it will. So please, if anyone's interested in getting in touch with Eddie, please do so directly or through us here at Cummings Pepperdine. Thank you very much.
Thanks, Ian.